Welcome to Cost Saver Conversations. I'm Angela, and I ask the practical questions so you can quickly understand what matters. Today, I'm joined by Assad.
Hi, Angela. We are unpacking UK cladding and EWS1 costs, how to protect your mortgage in 2026 today, and tying it back to the wider cost saver ecosystem, including tools like UK cladding EWS1 cost and mortgageability calculator, so you can turn insights into action quickly.
Just a heads up before we dive in, we are your synthetic hosts. We are great with numbers, but as AI, we can sometimes be confidently wrong. Think of us as the digital versions of your most knowledgeable, slightly caffeinated friends.
Exactly. Treat this chat as a smart estimate only, not as professional financial guidance. Always check important details with official sources or a qualified expert before making any big decisions.
Welcome back, everyone. So, today we're getting into something that honestly has been a nightmare for a lot of homeowners across the UK, the cladding crisis. It's been, nearly a decade since Grenfell, and thousands of leaseholders are still stuck. Assad, it's still really bad, isn't it?
Yeah, honestly, it is. The Building Safety Act came in 2022, and it was supposed to sort things out. And in some ways it has, like genuinely. But in other ways, it's created new layers of paperwork, new arguments about who counts as a qualifying leaseholder, who actually pays, which is always the big one.
Always the big one. So, we're sitting here in 2026, and I feel like the panic around EWS1 forms has sort of cooled off a bit. Some lenders are even lending without them now.
They are, yeah, particularly for buildings under 11 meters. A lot of the major lenders have relaxed on that front. But, and this is the thing, the underlying problem hasn't gone anywhere. If your building still has dangerous cladding or even compartmentation defects, then your flat's value, your service charge, your ability to get a decent remortgage rate,
All still on the line.
all still on the line, yeah. And doing nothing, right? For an average leaseholder in a flagged block, that can mean $200 to $500 a month in higher service charges, plus thousands in lost equity at remortgage time. It's a lot.
Wait, $200 to $500 a month just in service charges?
Just in service charges, yeah.
That's wild. Okay, so, and I want to make sure people understand this. The EWS1 form itself isn't actually a legal requirement, right? It's more of a,
It's a valuation tool created by RICS and UK Finance. Lenders use it to decide whether they'll lend, but just because your building doesn't have one, that doesn't automatically mean it's unsafe. It's just lenders want to see it. Does that make sense?
yeah, that does. So, who actually foots the bill for getting the EWS1 done?
Officially, it falls on the building owner or the freeholder, not on individual leaseholders. But, and this is where it gets annoying, that cost is almost always passed through the service charge unless protections apply. So for a mid-rise block in 2026, you're looking at between $6,000 and $15,000 for a typical assessment.
That's a big range.
It is, and for high-rise buildings, anything over 18 meters where they have to do intrusive surveys, actually opening up wall sections, that can push it to $25,000 or more. Even if you spread that across, say, 40 flats, that's still several hundred quid per leaseholder just to find out whether there's a problem.
Just to find out, not even to fix it.
Just to find out, exactly.
Okay, so what else drives the cost up? Is it mainly the height of the building or?
Height's the biggest factor because anything over 18 meters triggers stricter oversight from the building safety regulator. But then you've got cladding type. ACM, HPL, certain insulation materials, those are all flagged as higher risk. And then, this one surprises people, compartmentation defects, missing fire breaks between flats, those often cost more to fix than the cladding itself.
Oh, really?
Yeah, and then balcony materials, timber decking, combustible substrates, that's become a whole remediation category on its own now. And surveyor availability. There's a real shortage of qualified fire engineers, so in some regions you're looking at 6 to 12-month waiting lists, which obviously pushes prices up.
I hadn't thought about the waiting list angle. Yeah, that's frustrating. Okay, so if your building actually fails its EWS1, who pays for the remediation? Because I know the rules changed.
They really did. So in 2026, there are basically three funding routes. First, developer-funded remediation. Around 50 large developers have signed legally binding contracts to fix buildings they built or refurbished in the last 30 years, at their own expense.
Okay, so that's good if you're in one of those buildings.
Right. Then second, government-funded schemes. The Building Safety Fund covers cladding on buildings over 18 meters, and the Cladding Safety Scheme covers buildings between 11 and 18 meters where no developer can be held responsible. And then third, and this is the one nobody wants, leaseholder contributions. For non-qualifying leaseholders or for non-cladding defects in certain scenarios, you may still face capped contributions.
So, okay, what actually makes you a qualifying leaseholder? Because I hear that phrase thrown around constantly, and I'm not sure everyone really gets what it means for them personally.
Yeah, so this is really important. The Building Safety Act introduced statutory caps on what qualifying leaseholders can be charged for non-cladding defects. Those caps are £10,000 outside London, £15,000 inside London, spread over 10 years. But here's the key bit. For leaseholders whose property was worth under £325,000 outside London or $1 million inside London on 14 February 2022, and who owned it as their principal home, cladding remediation costs cannot be passed on at all. Zero.
Wait, zero?
Zero.
Oh, that's actually reassuring. But I'm guessing if you're a buy-to-let landlord, it's a different story.
Yeah, if you bought your flat as a buy-to-let and you've got 3 or more UK properties to your name, you're very likely a non-qualifying leaseholder. You could face the full uncapped cost. And this is, it's a real trap for accidental landlords, people who just sort of drifted into having a couple of properties. It's absolutely worth checking before any purchase or refinance.
So, what are we actually talking about in terms of remediation costs? Like, give me the numbers.
Okay, so, and these vary a lot, but typical 2026 figures for mid-rise blocks, full ACM cladding replacement, $40,000 to $80,000 per flat. HPL or timber cladding, $25,000 to $55,000. Compartmentation and fire stopping works, $8,000 to $20,000. Balcony remediation, $6,000 to $18,000. And then waking watch, that's the interim fire patrols, $150 to $500 per flat per month. So you can see why one defective building can cause, six-figure financial stress for unprotected leaseholders.
Those numbers are just staggering. You mentioned a real example in the source material, Priya in Manchester?
Yeah, Priya. So she's in a 14-story block. Her EWS1 came back B2 in 2023, ACM cladding and timber balconies. As a qualifying leaseholder, her flat was worth $210,000 in February 2022. She paid nothing for the cladding works, hit the $10,000 cap for the non-cladding defects spread over 10 years, and she successfully remortgaged in 2025 once the developer contract was signed. But her neighbor, who owned 4 buy-to-let flats across the country, faced an uncapped deal estimated at $62,000.
Wow. And the difference between them was.
One form, the leaseholder deed of certificate. That's it. That's what separated a manageable situation from a $62,000 bill.
Okay, well, that's terrifying and motivating at the same time. So let's talk mortgages. What do lenders actually want to see in 2026?
Right, so even if you're in a remediation program and your liability is capped, lenders still want certainty about the funding pathway. They're looking for an EWS1 form, ideally rated A1, A2, A3, or B1, dated within the last 5 years. Evidence of remediation funding, like a developer contract or government scheme acceptance, your leaseholder deed of certificate, a landlord certificate from the freeholder, and reasonable service charge projections, including any waking watch costs. Without those, even a technically safe building can be deemed unmortgageable.
That's a lot of documents. So if someone's coming off a fixed rate soon, what should they actually do?
So the simplest thing is often a product transfer with your existing lender. That avoids a new valuation and a new EWS1 check entirely. Most lenders will still offer their existing customers a new rate, even on a flagged building.
Oh, that's handy.
Yeah, and if that's not available, get a specialist mortgage broker, someone who actually understands cladding-affected blocks. They'll know which lenders are currently lending on which building types. Some lenders will now do a subject to remediation valuation, so they'll lend at the post-remediation value if a funded works program is in place. And a shorter fix, like a 2-year deal, can make sense if remediation's expected to finish within that window. Then you remortgage at full value later.
Smart. And sorry, you mentioned earlier about getting the deed of certificate sorted now, even if you're not remortgaging. Why is that so important?
Because freeholders are legally required to provide one within a set time frame, but in practice, many of them just drag their feet. Having it on file saves you weeks of stress later, and it costs you nothing. Just a few emails and a signature. It's honestly one of the most important things you can do right now. Have I explained that clearly?
Crystal clear. What about selling? Because I imagine that's still pretty tough.
It's tough, but it's not impossible anymore. Buyers and their solicitors will want the full evidence pack. EWS1, leaseholder certificate, landlord certificate, remediation contract details, service charge history. And you've got to be realistic about pricing. Even a fully funded remediation program often results in a 10 to 20% discount compared to equivalent flats in unaffected buildings.
Because buyers are pricing in the disruption.
Exactly. The hassle, the uncertainty, just the general disruption of living through remediation works. It's not nothing.
And you mentioned something about lenders looking at more than just cladding now?
Yeah, so I was going to say, actually, it's worth flagging. Lenders are increasingly looking at the total risk profile of a building. So it's not just fire safety. It's energy efficiency, flood risk. If your block is near a river or in a low-lying area, they increasingly want flood risk assessments alongside the fire safety paperwork. A flat with cladding concerns and flood risk is going to be harder to mortgage than one with just one of those issues, even if each one individually is sort of manageable.
Right, because it all stacks up.
It all stacks up, yeah.
Okay, so let's do the practical bit. If someone's listening to this and thinking, okay, what do I actually do? Walk us through it.
All right, so step 1, confirm your qualifying leaseholder status. Check your ownership records and where you were living, your principal residence, on 14 February 2022. Step 2, request a EWS1 form from your managing agent or freeholder along with the date and rating. Step 3, ask for the landlord certificate under the Building Safety Act, which they must provide. Step 4, submit your leaseholder deed of certificate to formalize your protections.
Go on.
Step 5, check the building's remediation pathway. Is it developer-funded, cladding safety scheme, building safety fund? Step 6, get current service charge projections in writing, including any waking watch or insurance loading. Step 7, speak to a specialized mortgage broker well before your fix ends. And Step 8, and honestly this one gets overlooked, keep a paper trail of every email, every certificate, every assessment for future buyers and lenders.
And how long does all of that actually take?
A few hours of admin spread over a couple of months, and most of it costs you nothing beyond your time. Start with step 1 this week, especially if your fixed rate ends in the next 12 months.
Fair enough. So, and I just want to make sure we land this properly. It sounds like the cladding crisis in 2026 isn't this single emergency anymore. It's more of a long building-by-building grind. And the Building Safety Act does offer real protection, but only if you actually go and claim it.
That's exactly it. The biggest mistake we see is leaseholders just assuming their freeholder or managing agent is handling everything, and often they're not, or they're not doing it fast enough. Your mortgageability, your service charge, your insurance, your ability to sell, it all hinges on having the right paperwork and understanding where your building sits in the funding pipeline. Spend an afternoon getting your qualifying status confirmed and your deed of certificate filed, and you're ahead of most of your neighbors. A clear plan beats a vague worry, every single time.
Brilliant. Assad, thank you. That's been really, really practical. If you're listening and any of this applies to you, honestly, just start with step 1. Check your qualifying status. It costs nothing, and it could save you tens of thousands. We'll see you next time. Quick side note. This guide connects with other cost-saver blogs, especially Choosing the Right House Survey Level, MEES, Energy Performance Certificate C, and The Costs Landlords Keep Missing, and Protecting Your Home Finances Using UK River Level and Flood Alerts.
Exactly. And reading those together helps you connect the dots across your household budget, not just this one topic in isolation.
And if you want to apply this immediately, jump into tools like UK Cladding EWS1 Cost and Mortgageability Calculator right after this episode.
Primary sources used here include Building Safety Act 2022 and claddingSafetyScheme.gov.uk, so you can verify the data yourself and stay evidence-led.
That wraps this cost-saver conversation with Angela and Assad. If this helped, share it with someone who could put these ideas to work this week.
Your next step is simple. Try UK Cladding EWS1 Cost and Mortgageability Calculator, then read Choosing the Right House Survey Level and use them together to take action today.